CPI, FOMC, OPEX, and rolling into 2023. Those are the key ideas for our weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. This is for the week of December 10th, 2022. Everybody, I'm Josh. I'm the founder of Trade the Profile. We're a skill development firm primarily focused for traders who are looking to express consistency or achieve consistency in their approach in futures markets, specifically the ES, the NASDAQ, the Russell, and crude. And we use profile, market profile, and volume profile as kind of the key bedrock analysis tool to help us know where we are in the markets to make better decisions. And so this video is really kind of our first stab each week at what is our plan for the week, what are the areas of interest, what kind of expectations do we have, what kind of events do we have to navigate around so that we are not caught off guard by those things, but we are prepared. And this is part of having a routine process. You want routine results? Have a routine process. And so this process always typically starts off by just a reminder of kind of what's happening at a macro level. And the story from a macro perspective is really the one that's been in play for quite some time, and that is the story of inflation. And that's been the story of 2022 as we've transitioned from what's called a monetary market, where the Federal Reserve is supportive of stocks, into a fiscal market, where the Federal Reserve is against stocks. And one of the fundamental rules you learn from being active in markets is you don't fight the Fed. And we have been, essentially fighting the Fed all year. The good news is it's the end of the beginning. The bad news is it's not the beginning of the end. So we still have more of this to come in 2023, and I tend to think it's going to be even longer than that. However, right now we're fairly stable in front of a pretty big macro year, and we're looking here at the S&P versus the VIX curve, which is giving us a sense of how participants are hedged coming into a very important week around an inventory price that's really, really important. In going back from 2021 till now, 3,900 is the most traded price of that period. So really from the breakout above the election until now, that has been the most traded price. We're below the most recent pivot high. We're above the most recent pivot low. And we have what we call a mixed VIX curve, meaning that the short-term curve is inverted, meaning everybody's hedged up and concerned about the road ahead. And then the longer-term curve is normal. So they're not quite fully hedged. What does that mean? It means that we still have some potential to get into a fully hedged posture going into these large events. Now, if we can get there and we can get fully hedged, what that translates is that we'll expect that once we get through those events, we'll actually see some higher prices. How I think that translates out is that we can push, towards either one of these prior inventory prices yet this year. I do think, though, that we've probably seen the low of the year. Not necessarily the low of this event. We're more likely going to still see some of these prices into 2023, just not yet this year. So with that being said, let's look a little bit more at the calendar to see, kind of what we've got ahead of us and how we can prepare for that. On the calendar here, which you can access via the Trade the Profile website, Tuesday, we have core CPI. Now, this is the core inflation report. This typically in years past was no big deal. Nobody really cared. It has been a really, really big mover every time in this year. And so, we've seen the NASDAQ, for example, move 400 points in 30 seconds off of this release. We've seen the ES move 100 points plus. Expecting pretty big move again this week. That happens on Tuesday. That's going to happen before the open. Then on Wednesday, we've got the FOMC. So they were going to have their interest rate decision and discussion. And then there's going to be the press conference. Typically, that session is one where, we don't really move a whole lot. We kind of, balance in front of that. And then, there's some movement as Powell does his press conference. On Thursday, we got initial jobless claims, and some retail sales, not that big of a deal relative to the other things. And then on Friday, although not noted here on this calendar, we do have options expiration. This is where we roll from one contract to the next. And this is actually what we call quad witching, meaning that there's a whole number of products that are all expiring on the same day. We have index options, we have index futures, we've got options, we've got monthly options, quarterly options, all on one day at different times of the day. It is quite the event. So that is really kind of the last big thing we have to get through in 2022. And then I think everybody kind of rests until we get back into 2023. With that being said, it's kind of like an overall context. Let's look at the specific products is what we're looking for in the week ahead. And we're going to start here by looking at the S&P 500. And as we start, we're going to go back to our quick sheet. Now, this is a tool that we put together each week that just gives us some ideas around context. What's the auction expecting in terms of ranges, so that we're fairly well grounded. What it's telling us is that this week, based on how we closed, we're in a balanced posture in the S&P, meaning that the last traded price is very near the most traded price of the last week and the last month. It's also of the last 90 days and year. This week, we're expecting 121 points. I think we're going to exceed that, which put the upside to 40.53 and downside to 38.83. Still looking at about 57 points in the session, 29 points in the first hour. What does that look like on the chart? Let's go and start first by looking at just the long-term composite. And again, this is just showing us where we are at this most important level. And looking for a move away from balance. Now, all things being equal, based on how we've traded the last couple of weeks, we'd expect the auction to keep going lower. Catalysts can change that. So as we go look here at the ES, and we'll start here on a monthly basis, and we're going to just note a couple structural things of where we are that gives us some insight. So here's what I'm talking about, where here's the price, and here's most trade price is 20 days and 5 days. It's all very clustered. When an auction's like this, it's ready for a move. So very typical, we get into this type of relationship before an event like a CPI, before an event like an FOMC, and we'll look for moves out of this area. To the downside, really kind of looking for us out of this area to go and test. This was the last CPI that we had. Okay, so that is all vulnerable. We've not tested those prices. In fact, we were in a spot where we were looking for new lows down to 36.90 when this inflation report came out, and we launched higher. So that's definitely to the downside, within the realm of possibility. To the upside, we've got year-to-date VWAP that we sold off of last year, as well as back to 41.50 and the most traded price of 2021. So either one of those, I believe, are objectives. And it's really, kind of the inside out trade that we're looking for this week. We'll see a big move off of CPI to start, and then we'll see, does the FOMC continue that, or does it counter that? We could easily see a trade that goes up on CPI and then back down on FOMC, or we could see one that goes down on CPI and back up in FOMC. We'll just have to kind of watch and see how that plays out. We are approaching monthly expected low here. We're back to, really the most traded prices of last month. So we're just really in the middle. To get to the upside, we need to get above last year's VWAP to push higher. To the downside, we've got last month's VWAP and all of this inventory. So again, expecting a move from balance on a monthly basis. Now, when I look at that on a weekly basis, it gets a little bit more bullish or bearish, at least to the start. We've been in a bracket or range from about 40.50 to 39.20 for quite some time. We tested above, and in fact, last week our expectation was from 40.80 that if we were above that, we were looking for 41.50 on to 4,200. But we also said, hey, if we test below here, we're returning back to 39.60. That second scenario is the one that played out. We actually tested below that, the bottom of this range, and then closed lower on Friday with a profile that tells me that we're likely undone. So path of least resistance is actually going to be earlier lower in the week, at least down here towards 39.40. See if we get new weekly lows. That would be on Monday, and then we'll see what happens on Tuesday. Again, if the sellers come in, I'm expecting a push all the way back to that prior CPI reading. If we're above this range, then we look for a move all the way back up towards, ultimately up towards 4,100. And I'm telling you, it's going to be a big move. I mean, like this was the move off of Powell's comments a week prior, right? So like we see big moves off of this. Just looking at the market profile graphic, again, kind of affirming what we were expecting last week in our outlook is that we saw these holes in the profile. And so if we failed here, we were looking for the auction to clean up and retest all these prices. We did that. When an auction goes back through references like that, it often says, hey, we're going to go test lower. And that's what led to the lower tests in the week. But ultimately, you can see we kind of finished the week in what we call a balancing range. And so we're very balanced around a number of longer term references and looking for moves in either direction. We did close on the low end back towards value. So expecting, at least early lower prices to start the week, unless we can get above kind of 39.75, looking for tests down towards 3,900 in the week ahead. And so that's, kind of, where we are on the S&P. Because of these big catalytic events, we're really going to have a more open stance in terms of what we're looking for in that product, and more reactive than we might be otherwise. Okay, now looking at the NASDAQ and get a picture of what's going on there. Also in a balanced posture, NASDAQ is doing about 217 points still per session, 125 in the first hour. We're looking for, 12,023 to the upside, 11,342 to the downside. Not really near weekly low or monthly or expected lows or highs. So that's all good. What does that translate to in terms of the charts? Well, let's go and get to the NASDAQ and take a look at where we are. Now, first, starting at the longer term chart here, just to get a sense of, where we are from a back adjusted inventory level. And we're right here at this most traded price of the year, also very much coiled to go. You can see that we have been holding where we left from CPI. We've held below these prior highs, and we are coiled. So we're just going to have to kind of watch which direction that we take off from these catalysts. We're balanced. The general rule is when you're balanced, you're expecting moves from balance. What does this look like on a monthly basis? Okay, we're right in the middle. We've made slightly higher highs for the month, but we're right in the middle of, this this muck, as it was, and a range that kind of goes back through here. So failure from here puts us on a path back towards 10,800 to the upside. Especially if we can get above this range, we could still potentially push toward the year-to-date VWAP. But we are very much balanced and looking for the auction to move from balance off of that. Looking on a weekly basis, same story that we expected in the ES happened here. We were expecting higher prices towards 12,200, 12,300. Failed early in the week, continued to trend all the way back. We retraced everything from Powell, and that put us in a position now where we closed on the lows below value. So as long as we stay below this, looking for new weekly lows to start the week, and then see where we go from there as we get into CPI. Post CPI, if we're above this price, look for us to push all the way back up to the top. If we're below those references post CPI, then we'll be exploring much, much lower. Here you can see on the TPO chart just kind of how balanced we are in this range with the close on the low. So we're looking for the bottom of this range on Monday using 11,635 as kind of our key pivot. That's the most traded price from last week. So if we're above that, kind of with the bulls, if we're below that, with the bears. And we do have quarterly VWAP down here that's very achievable early in the week as we go lower. Okay, so that takes care of the NASDAQ. Let us now go over and talk about the Russell. And so as we go and look again, oh my goodness, what is this? But we have a balanced auction. You're starting to pick up a theme. We're balanced. When auctions are getting ready to go into events like this, they get coiled because it makes sense, right? I hope it makes sense. The reason that auctions do this and why we expect this is because who wants to be the person making a big bet before that? Well, it's safer bet is to react to the move, not trying to front run the move. Here we are in the Russell. We're below 1940 and above 1676. That's really kind of the larger range that we're paying attention to. As we go and look at the shorter time frame charts, we can see how we're also started to eat into that CPI range from last month. Have tested a couple times the year-to-date VWAP and have sold off of that. I would definitely be watching 1843 in the week ahead, as that's going to be a key spot that if we can get above, then we could see some buying stepping in. But we've got kind of 1810 to 1843 as what I would call a chop zone, an early indecision. Note that the profile here is very fat. Now, this could be, given how we've been kind of moving higher, what we'd call a liquidation that if we can get above this 1843, we'll rotate back up to the top of the bracket. However, if we stay below, most likely we're going to go and revisit where this last CPI came in. So that gives us a bell curve. And, in markets, the bell curve is always your friend. Okay. So that I'm going to largely avoid this area. Below here, we're looking to push in this direction towards these lows. Above, we'd be looking to push in that direction. Okay. It's a very much an inside out week. The first shot across the bow is going to come from CPI. All right, so that takes care of the indexes that we look to track. Now let's talk about crude oil and get a picture of what's happening in the energy space. Which overall, crude has been, or energy has been the large leader in terms of what's happened from price action, while other things have not been working. Looking at the long-term chart, though, where are we? We're really kind of on a beeline back towards the top of the 2021 high. And you see we got real close this last week. What's happening on a quarterly profile, that's what this is, a quarterly, is very much tapering as we're moving lower. The large move began from balance. This again illustrating the fact that moves begin from balance. Last week we talked about as they pushed higher, if they could get above this, they could go back. Instead, we pushed away. So we're nearing the lows of the year as we close the year. Not quite there on a monthly basis. What's going on? We have pulled the 5-day lower. The 20-day is here. If we push lower, we're getting to what's called an extreme posture, and that's a spot where we are now running out of inventory on multiple time frames. 90 days up here. So when that happens, it's like on all time frames, we're getting less and less participation. We saw that on the quarterly profile. It's not a great spot to be short. I will say that. It's not a spot to be long yet either, but it's definitely one to say, hey, let's be careful to the downside. Very trendy last week. I mean, they attempted to get up to the weekly VWAP off of, here was the EIA range that they sold off. They came back to test it and knock back down. Ultimately, pulling the 5-day lower. That's going to be kind of the key reference to start the week. A little bit of buying excess to close Friday, a little unusual. However, unless we can get above 72.60, we're going to be looking for test lower. Now, if the tests come lower in the week early, we stretch the profile out. I'm going to look for responsive activity back towards last week's VPOC and then pushes higher. If we go higher first, watch, like towards monthly VWAP or about, in the middle of this range to see if we don't rotate then back down and then make new weekly lows. A lot of it often comes to like, where do we get to those prices? We know the prices. The question is, when do we get to them to impact how we kind of play that? All right. So that is crude oil. And that kind of takes care of the core products that we look at every day from a daily outlooks perspective. Now, typically, we will talk about other ideas in focus. I mean, the idea in focus right now is to work on your development. And to that end, a little bit of a development focus, and that has to do with contract roll. Now, I got a question about like, what is contract roll, and how does that work? How do I know when to roll, and what exactly is going on? Well, if we go over here and look at the different contracts of the products. We've got what's called a product curve of all the different contracts that are trading at any given point. So like right now, you can see there's actually there's what's called a front month, and then there's a forward month. The front month is the nearest month expiration that we can trade. That's where typically all of the volume is, especially if you're looking at an index product. Now, if you're trading in agricultural products, or even energy, you'll see people trading in future contracts several months out as opposed to the one that's nearest to expiration. In the indexes, we're almost always in the nearest product. Now, we're in the December contract right now. We are rolling to the March contract. And so you can see right here, here's the December and March. You can also see the volume, and this was from Friday, between the two contracts. And it's really kind of split, meaning that half of the volume is in December and half of the volume is in March. Now, the question is when do I trade which one? And when do I price? Because they actually, notice this, they have different prices. In fact, there's about 30 points of difference between the March contract and the December contract. So we need to, if you have prior ranges and references that are related to the old contract, you have to adjust those up to the new contract to meet whatever that price is. We can see that here in the curve where we're looking at, let me just get my pen here real quick. We're looking at the current, here's March, here's June. Where are these contracts? Like future contracts, they're already priced higher. Right now we're 30 points higher in March than we are in December. So we're gonna have to actually adjust up any references about 30 points to to carry them forward. We do that in equities. We don't necessarily do that in grains, but since most of us are talking about equities anyway, that's how we do it. Now, I will stay in the contract that has the most volume if I place a day trade until I see that flip. So right now they're about split, but if on Monday there's more volume in March, that's the one that I'm going to be trading. And actually of late, the CME's kind of helped us out by making the official roll date be the Monday as opposed to Friday. Used to be, it'd take us, a number of days to kind of get front loaded. Now, the other thing that's going to happen with this is it's going to take all week to finally get everybody out, because one of the things that people will do during this period of time is they're going to play this spread or attempt to play that spread. What I mean by that is they're going to try to be long in one contract and short in another one to see these two converge. Ideally, they hit the same price at expiration. They don't always converge. Last expiration didn't. It actually widened. But this is a trade that's out there that people will be looking at. It's not the trade for me. It also explains why we get kind of wonky moves in roll week. And I know some wise and prudent traders who just go, hey, roll week is not for me. I don't want to trade. It really splits the volume and it can make the price action more erratic or difficult to express. But definitely focus on the one that has the most contract volume. And then after Friday, we will only be in the March contract. Okay. So some questions to think about as you are looking to do or think about roll. Again, just reiterating. One, rolling from the front month to the forward month. The forward month is the next month contract that's going to be primarily in focus. Equity roll takes a week to complete. So there will still be people trading the December contract until Friday. All right. After that, then it'll all be March. Trade the contract with the highest volume. And if you don't know which one that is, pull up on a platform where you can see the volume between the individual contracts. And that's the dated calendar contract, not what we call a continuous contract. All continuous contracts on Monday will be quoting March prices, not December prices. But if you want to see if you want to make the decision based on volume, then you got to go look at the actual named calendar contract. Okay, so that's our dev focus for this week. Aside from that focus, a great time to be thinking about being a 4-question trader as you go into the year ahead. 4 questions that we ask and answer before we put on a trade. If you don't know what those are, go check those out. Other ways that you can build skill this week, aside from the 4 questions, is to follow us on Twitter, interact with us, ask questions, schedule an insight session. We have time set aside where we do audits and we just take a look at what traders are doing, give them some feedback. This is a great time to work on your playbook. And so there are a lot of traders that are getting onto our development desk right now to prepare for 2023. One of the best things that you can do right now is not to try to trade 2022, but to prepare for 23. And if you have questions about the platforms that you see here, you can check those out at edgeclear.com and windowtrader.com. They're partners in the industry. We're not paid to say that. It's just they're great tools. And then for those of you who are in the pathway, we'll see you this week for our dev sessions across this crazy week. So that's it for our outlook this week, guys. Be careful out there. It is going to be some heavy sledding. Gird your loins. And we'll be back for another outlook next week, kind of after we see how that all played out. But expect a lot of volatility, a lot of big moves, especially pre-market on Tuesday. Wednesday, there's not going to be a lot of move until Powell makes a comment. And during his Q&A that's going to come in the afternoon. And then we got OPEX on Friday. We get through this week with the lows intact, and I think everybody can kind of sigh a breath of relief, at least to get through the end of the year. And then it'll be talking about 2023. Thanks for watching. Thanks for your comments and the ways that you guys have told us that these have been helpful to you. Thanks for watching this year. It's been a lot of fun, and I hope it's been insightful to you. And we're looking forward to do more of that in 2023. Trade well, and we'll talk to you later. Peace.